Hi guys, it's Kel once again. 4th of July, Tuesday, MAO with Kel once again. All right. Now, normally on the US holiday, I don't do any MAO video. But today, I want to share this with you because last Sunday, I was talking to about 50 of my students online, and we're talking about the macro view of the market. And one thing I mentioned to them is that I'm actually very bullish in the Chinese market, China, all right? And I'm very bullish in gold, and I'm bullish in crude, these three. But the thing is this, 4th quarter of 2023, not now. But definitely is worth looking at the 2-3 counters because I believe that a bottoming out effect is nearby, or if there's going to be any global recession and causes the 3 market to go down instead, that will be the best thing to happen. All right. In fact, there's 4, even including Apple. But Apple aside today, we talk about this 3 market, primary on China. Okay, let's go. Right, disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. Okay, hold on. There's something wrong with the PowerPoint. Let's go. Okay. Now, last Sunday, I was sharing with my students. Okay, I was telling them regarding about my view of the market. And one thing I highlighted to them itself is that the market itself, right, especially China. Now, a lot of people, you can see on Reuters, Bloomberg, especially these two, a lot of propaganda going on. Apparently, I say that the China market itself is terrible, the property price is terrible, that it's going to crash and stuff like that. Now, I will say that they are not wrong. The data shows that the Chinese economy is definitely weak, but I don't think so. In fact, I feel that it's time to look at it very soon. So my second half of 2023, especially the 4th quarter, I'm waiting for the pullback to come, and I'm going to go long in crude oil, gold, and China, and of course, including Apple, this stock itself, okay? So these are the 4 markets that I will be covering throughout the next few months, but today, let's look at China itself, okay? All right, so first of all, Beijing and Shanghai record largest decline in existing home prices. Oh, this is bad, right? Now, we know the 2 major cities, Beijing and Shanghai, they had their largest fall in the second-hand home prices among the 70 large and medium-sized cities, all right? For Shanghai, it's up by 0.8%, and that's a big drop compared to the survey of all the cities being surveyed. And of course, Beijing dropped by 0.6%. So basically, experts are saying that now the fall in prices in 2 bigger cities is a sign of bad economy. Now, definitely for sure as well, we know that China did not really rebound after their reopening of COVID. And apparently there's another wave of COVID virus hitting China again. But let's just be upfront here. We saw that happen before in Singapore. After we reopened, we were okay for a while. Then again, we have a wave of people getting COVID once again. So it's nothing new here itself. So apparently, the articles are all writing that a chance of the banks in China going to go bankrupted, and of course, property prices will fall. Now, I covered this before, and it really, really happened. The stock market really came off. The property prices came off, and so remember Evergreen? Yeah, but the thing is this. Now, I think that the selling should stop right now. In fact, itself, we can see that the boys are actually entering. So the propaganda is they're telling you that it's going to go down further, but the boys are buying. Now, this, if you bring back 1 year ago, it's the same thing as Apple had in Nikkei, right? In Japan, where the economy was faltering, everything was going down. We're talking about the silver hair people, talking about the property prices going down in Japan. But you saw that what happened. The big boys went in Japan instead, like Warren Buffett. And of course, right now, 1 year later, the Nikkei is at 30 years high. So you can see how these boys play this game, right? So, of course, the China factory, the activity shrink for the 3rd month as recovery momentum stalled. We understand the PMI went down to 49. But of course, do understand this, manufacturing went down across the board. Now, I'm covering this on US too. And if, let's say, if you're talking about China going down, then why not about US then? That's something that I don't understand. And of course, right now, fund managers are saying that very likely there'll be no large China stimulus coming in. Well, all I can say is this, how do they know? All right. So my point is this, yes, the PMI data is at 49 compared to the 48.8 in May and 49.2. So isn't that an increment? But again, you can see that the market is just focusing on the downside. But nonetheless, economic momentum is still weak in China. This one is confirmed for sure. But the thing is the growth target is still at 5%, which is still quite okay, right? Compared to the US, it's still at doing 2% right now. What do you think? So there's a lot of news going on, and basically from Bloomberg, they are saying that right now China is having a sputtering recovery, and they believe that there will be more downside because of sluggish consumption, youth unemployment, weakening export. Now, Consumption, I don't think it is anywhere lesser than that. But of course, again, I don't know what we're staying in Singapore right now. But youth unemployment, yes, indeed. A lot of youth now, after they graduated, right, they couldn't find jobs. Because why? The US have basically extracted a lot of business from China. All right, don't you see that? So of course, if they do that, lesser people get the job, then this is going to happen. So that's the reason why China has already had meetings and meetings to get the business leader in China to come together and start to look at how to save the day. All right, so weakening export definitely for sure itself because of costing and inflation. We understand that. That's why the China nominal GDP itself, right, as compared to the US itself, may not be as fantastic. But again, we all know that this is just on paper. So now the thing is this, we are caught in a kind of a vicious cycle in the sense that we will need a massive stimulus to create a little moderate impact. Now, I don't buy this, honestly. He's a professor, definitely I give my respect to him. I think that we don't really need a massive stimulus from China itself because we all seen before, a massive stimulus will create incredible inflation. And then what happened is, right, you may have a short burst of upside rally, then after you have to pay your dues. Like how now ECB is paying their dues right now. And also America, we can see that they're kicking the can down the alley. So this is like a matter of time. So the rate cut may prove inefficient to boost housing. Yeah. So the Chinese home mortgage interest rate and year-on-year change in sold residential buildings floor space, you can see that they are all at the very low end itself. The last time we see this was 2016, and of course in 2009. So in a way, yes, and it's in a very terrible position right now. But if you ask me itself, right, I just feel that this is a great opportunity to watch out for this market. Don't you think so? If you think that, right, if the thing is that, if you think that by buying US right now at a high at 34,000, it's a steal, then to me, it's all right, buying into Chinese market right now where everything's at the low end itself, wouldn't it be better? So, of course, the China Credit Impulse and the JP Morgan Global Manufacturing PMI, we can see that both of them are going on the downside itself. So, undeniable, there is still a potential of the further downside in the Chinese economy. But again, if you look at it in this way, you can see that the last time we see a similar figure was back in 2012 and it was 2020. So, I think that we are near the base out period. What do you think, guys? Now, the Chinese stocks are cheap relative to the US one. We all know that because obviously, right, when the US stocks, all US company all extracted from China, definitely all the US, the Chinese stock has got hit very badly. And of course, currently now, right, the Chinese stock current valuation is discounted at the floor level for the last 10 years. So again, I want to ask this, if it's going to be at a floor level, whereby it's so cheap now compared to what happened in 2013, 14, 15, 16, then why not buy now? So why are we listening to the so-called expert from US, which we know that there's a lot of propaganda going on? Why don't we look at it from another perspective to invest? All right, but I'm going to repeat myself one more time. I'm not asking to buy right now. I'm asking to look at it soon, okay? Because I believe that the bottoming out effect is coming in. And I say that pretty like 4 or 5 times just now already. So the weakening China is a problem for Germany, undeniable. If China doesn't really rebound or recover, right, a lot of countries that is around them or needs them will be affected. So that's why now you can see that German imported goods into China has really at the low level because, again, the demand isn't in. And of course, you look at the China manufacturing data versus the US manufacturing data, we can see that we are all on the slump coming down. So that's the reason why I kind of believe that US will hit a recession by September to October period. And of course, China market will definitely follow because you can see every time when this happened, China and US, they actually works in the same manner, right? So that's the reason why now, if you ask me, I believe that both countries will get hit. But to me, it's all right. The country that you can consider to invest where the stock is so cheap right now is China, all right? So you look at it, the current EZU ETF versus the Euro manufacturing data is really incredible. Another divergence. Now, these two, usually they go in tandem, they go up together, they go down together. It's always like this since 2010 and beyond, right? But recently, we can see that because of all the stimulus coming in, the EZU ETF, which is the the investment composed of the large and mid-cap size equity from developed markets that use euro as an official currency. The EZU ETF now is doing very well, but the manufacturing is actually at the bad side. So this is a very, very big discrepancy between the prices. And to me itself, right, this is just a matter of time. One of them have to give in. All right, so it's either the euro manufacturing going to shoot up to the sky, or basically the ETF come down. So what do you think will be easier, the manufacturing or the so-called ETF, right? So again and again, I will try to stress this myself, that if, let's say, the US stock market really comes off, together Europe, and then the Chinese market do come down, but the downside is not the same in equivalence, then I think that the bottoming out for China is there already, right? Think about that, yeah? Okay, so why am I so bullish on a side note itself? Because I see what's happening. Now, Yellen is going to head to China this week, and this is supposed to be her first visit to China as a Treasury Secretary, and very important, all right, very important. We all know that, right, the main idea is to meet Xi Jinping, and of course, to stabilize the relationship, avoid miscommunication, and expand collaboration where possible. Actually, the most important thing is this. We all know that US have decided in a way not to sell the chips to China. So of course, China reaction is almost immediate. All right, let me show it to you right now. So US considered the new restriction on the AI chips export to China. And of course, China just hours ago thought back by saying that, okay, I'm going to restrict the chip export to you. So it's like basically two neighbors bickering over something itself. So I believe that Yellen now is going to China because China recently bought into the bonds, okay, the treasuries. So that is one sign. And of course, if you look at it, right, Japan last year was also buying a lot of US treasuries, and what happened now? The Nikkei is at a high. So basically, right, this collaboration between them has to be done. And I believe that now only the Chinese now have the money to really support the US economy. So if you ask me, this trip to China is going to be pretty good. And I believe that when that happens itself, right, later on, when the price do come off, right, it'll be a good time to absorb it. What do you think? All right, I believe that Yellen's going for that reason, yeah? So you look at China A50 right now, the stock market has came from 20,000 all the way to 14,000 the last peak, and now it's at 12,700. So of course, the propaganda says that the market will continue to fall further to 11,000, which is not wrong, okay? But the thing is, if you look at the two RSI point, right, yes, indeed, these two are actually showing that the downside is still going to confirm. But you look at the two bottom RSI, right, we can see that it's a positive divergence. So if you ask me, right, I just feel that if there's going to be any economic pullback, maybe we'll see it going back to 12,000, something like that. Then after that, it will eventually bottom out and go up. And I believe that the next target itself is 15,000 by next year. So if my view itself, right, I believe that, right, 11,000, I mean, this 12,000 will be a very good price to buy. And if we come to 11,000, even better, then after that itself, right, the upside towards 15,000 is very high. Now, again, I stress this. I know that I've been still pretty, I'm long in the US market right now, but we're taking profit yesterday. And of course, you will say that, Kel, are you switching position now from a bear to the bull? No, I'm saying that I still stand on my ground that September, October, there will be a global recession. But the Chinese market, I believe, is going to stabilize instead. And of course, funds will pour in. And then after that, when the funds are going in and the so-called retailers get out, that is the time whereby the stock market for China will recover. And of course, when China does that, you can imagine what will happen to the rest of the whole world, right? So that's the reason why I'm pretty bullish in the last quarter of the year and to next year itself. Now, one thing is that if you look at China A50 using my own indicator, you can see right now, the market has turned rather bullish weightage on my KRW. So that's the reason why, even though there's so many propaganda, so many news on the market, but you can see that the China A50 counter is actually very stable. Now, the only thing is that the boys haven't come in yet. My KSI is still red. The momentum is getting better. Okay, so once we have the full package whereby everything's together, that means that the KSI is together, the momentum is together, the KW together, there will be some upside. So at the moment now, right, we don't have it, and I look at the bigger picture. So let's see whether maybe in the later part, right, I can tell you that this is a good time to buy into the market, right? Just what we saw here, that we're in 12,400. The bar was yellow, the KSI was green, and the KRW was cyan. So everything was perfect, and that's why the market went up. So something similar, but I expect a bigger run. All right. So that is all I have for you today. Hopefully you enjoyed this session. all the best for today. And of course, I'll see you tomorrow for the next MAO. This is Cal signing off. Bye-bye.